Hi everyone, this is Michael Kramer of Mach Capital. Today is Tuesday, August 26th, and it's around 4 p.m. New York time. So this week, there's not really a lot going on. We do have a GDP report coming on Thursday, August 28th, and then we'll also be getting a PCE report on Friday, August 29th. Other than that, this is the final week of summer here in the U.S. Monday, markets in the U.S. are closed for the Labor Day holiday. And so what we're kind of right now in is a very slow period of time. Although on Wednesday, August 27th, we will be having Nvidia reporting results after the close in the U.S., and that's going to have a big say in terms of where markets may go, at least for the next couple of days. And could potentially set the tone for when everyone returns from vacation here in the U.S. next week. But when we look really quickly at what's happening in the euro, we can see that we've just been continuing to chop sideways. And generally speaking, we're not really getting any clear indications as of right now in terms of what the euro's next move is going to be. Right now, we can see we're clearly just hanging around the 10-day exponential moving average. We're sitting just below a resistance level around 116.40. RSI is kind of basing out at around 50. And so we're not really getting the indications that the euro is going to break out, and we're not really seeing any signs yet that the euro is due to break down. I mean, you can see I have what looks like a falling megaphone pattern in the chart, and that would tend to be a bullish pattern. It would tend to suggest we see the euro break higher, but until we get above this resistance level around 116, let's just call it 117 for argument's sake, we're kind of just left to wait and to see what happens. I mean, we do have obviously downside risk to 114. It would be certainly much easier to break out and move higher than it would be to move lower at this point. But until we break out, we need to be careful and be on watch for a potential move lower in the euro. You can see for the most part, it's a similar type of pattern in the pound. We did get a pretty big move higher in the pound on Friday, August 22nd, although now we have given back some of those gains. We're still holding above the trend line, which appears to look like a bull flag. And right now, as long as we stay above the 10-day exponential moving average, which we closed just above it today, would suggest that maybe we do see the pound continue to start moving higher and moving back towards this 136 to 135.5 to 136 level. Obviously, a breach of this 134 area would be a negative and would suggest we could return to 131. But as of right now, at least, we can point to an RSI that at least looks like it's trending higher overall and not really in a terribly overbought position. So it's quite possible that we're going to see the pound continue to move up. The yen has been mostly consolidating sideways. Again, we have this giant flag pattern drawn out. What's interesting is really when you look at some of the spreads between U.S. 5-year and Japanese 5-year rates. What's interesting at this point is that for a number of years now, going back really to late 2021, we've seen the yen trade essentially with the spreads between U.S. 5-year, 10-year rates and, JGBs. And more recently, we've started to see signs of that spread really breaking down. This did happen in the summer of 2024, where the yen sort of defied the spread, and then eventually it resulted in a very sharp drawdown. And we're seeing a very similar sort of setup right now. And historically, if the spread were rising, we would be more inclined to believe that the yen was going to weaken and begin to move higher in price. But right now, we're not seeing the confirmation of such a thing happening in this spread. And that has me wondering, what is kind of happening here? Are we seeing some sort of breakdown in this relationship, or is the yen just not is the yen sort of not believing the move we're seeing yet? And it could result in a fairly violent move should the yen have to catch up to what's been happening in the spread. But when we look at it more from a perspective of the technicals, I mean, clearly we can see that we're just trading around the 10-day, trading very flat, very similar to what we're seeing in the euro, and just barely really hanging on to support around 146. And we're just sitting below resistance around 148.5. So right now, I mean, if this is a bear flag like we have drawn out, then we would expect to see the yen at some point break lower. But that doesn't mean it can't first go towards 151. And we really have to be careful of that, because you can see how tight the trading range is compressing. And at some point, this is going to snap one way or the other. And you can almost make a case that maybe there's some sort of flag pattern that has formed also here as well. Now, I mean, when you look at it, it looks like there's a pole, and here's your flag. And it would suggest that the yen ultimately break down and begin to strengthen versus the dollar. But as of right now, we're not really seeing any signs at this point to suggest that the yen is going to do that. So we just need to continue to watch these two zones right here around 148.5 and right here around 146.75, with a break of either one of those really giving us some kind of confirmation. When we look at gold, it's really just been consolidating now since April, and it really hasn't done much of anything. There's obviously lots of reasons to think why gold may actually begin to move higher, especially given some of the uncertainty here in the Fed and here in the U.S. regarding the Fed. And you could certainly begin to make a case that maybe we're forming some sort of larger ascending triangle pattern, which could lead to a pretty violent breakout should that happen and we get above this 34.20 or 34.40 area in the cash market. But as of right now, we're not again seeing anything that suggests it. I mean, here's your downtrend in gold, and we're getting close to potentially breaking out to the upside on the RSI. If we were to see the RSI, let's say, get above 60, I would think that would be fairly bullish. And I would think that that would potentially tell us that we're going to see gold prices begin to rise. Now, that would probably coincide with a euro going up, a pound going up, and a yen strengthening as well. And right now, that's what we're kind of waiting for to see whether or not that will happen. I mean, we have failed 4 previous times at that 34.40 level. But, again, we don't really see it breaking down either, and we are seeing a series of higher lows, which would kind of give us a sense that momentum seems to be building to the upside. We haven't looked at Brent oil in some time, and we can see that there's really not much happening here. We had started to see signs of Brent moving up, and then today we kind of wiped out a lot of those recent gains, dropping by 2%. There doesn't really seem to be an indication at this point that we're really going to see a major breakout in either direction. We certainly have seen that big decline, and we did manage to find some support in this call it 60 range. But as of right now, we're not really getting anything definitive when it comes to a trend. And really, when we look at this in a broader picture, you can see going all the way back a number of years now that we have been seeing lower highs really sort of taking shape now, going back since 2023. And really, you can go back much further than that, because the oil prices have really been ultimately dropping. And you can also make an argument that we've been forming lower lows. Now, we don't really know where this is going to end up finishing at this point. It could be that the trend is possibly changing and we're going to see this low hold and begin to move higher again. Certainly that would be the first major indication of such a thing happening. The other thing that is worth kind of pointing out, I guess, at this point is notice that is if you notice here, there's potentially early indications as well on the RSI to suggest maybe something is changing. You can see right here how we made a low on the RSI and made a close at 61.30 on the price. And then if you fast forward to here, you can see the RSI made a higher low, but the price made a lower low. And those can typically can sometimes be indications of turning points on bottoms. And so it's possible that we're in the process of forming some sort of major bottom here. But really, we don't want to see Brent really drop much below 65.5 to 65 even because if that were to happen, it would really break the trend line in any hopes of a higher low being put in. But right now, clearly, the trend still favors the downside until we get some sort of confirmation that this signaled some sort of turning point in momentum. And right now, it's looking like that's still very much a possibility. When we look at the DAX, we haven't really gone much of anywhere. Again, just pretty much trading sideways. I mean, it looks again like this megaphone pattern has served as a little bit of a turning point. You can begin to make an argument that maybe the DAX is putting in some sort of triple top-like pattern with these rolling highs. But in the meantime, you also have an RSI that's clearly trending lower. And it really, again, isn't giving us confirmation of anything. But I think we need to continue to treat the DAX as we have, which is that, upside seems limited right now. We have very firm resistance in this 24,500 area. So if that area breaks out, then you can start making a case to go to 24,600. And if 24,000 breaks out, well, then, sky's the limits. But until that happens, you can, right now, I think we have to protect to the downside and think that the risk here is that we go to 23,750 because, again, the momentum is really very bearish. We have failed 3 times now to break out. We could be forming what is a triple top. We would obviously need to break below 23,350 or so to really confirm that. But as of right now, I think that the onus is on the bulls to prove that the index can actually break out and go up, because right now it would appear that everything is favoring it to go lower. The FTSE did break out last week. We did have a nice rally in it as we kind of were looking for. And now today we were down a little. It will be interesting to see if this marks sort of the end of the rally in the FTSE, just because we haven't really seen copper prices here in the U.S. really revive since they ultimately saw that big decline. As of right now, the FTSE hasn't really been very much affected by it. So either there's a big gap forming between the two that needs to be corrected for at some point, or the FTSE has just moved on from this relationship. I don't know of any major changes to the index, though, that should make the relationship really break down. And so I think right now we're kind of just keeping an eye on the idea that you have potentially a bearish reversal pattern forming with the same setup that we saw in the in Brent oil, with the high on the RSI that reached 74.7, and then the lower high here at 63.4 despite the higher prices. And that's a similar setup to what we saw in oil, but just the opposite direction. And so it's very much possible that we're seeing some sort of topping pattern here in the FTSE. Obviously, that gets invalidated if we move above 93.20. But until that happens, we can maybe look for the FTSE to move back to 91.50 or so. We've seen the Nasdaq give back the last couple of days, although we did rally on Friday, and that did help recover some of the losses we saw last week. I mean, at this point, the Nasdaq is really sort of dependent upon what happens with Nvidia when they report results on August 27th, which is Wednesday evening here in the U.S. Obviously, if the results are stellar, you could maybe see the Nasdaq move back towards 23,900. Obviously, if the results aren't good and disappoint the market, there's probably a good chance that we're going to not only see the Nasdaq move down to 22.7, but potentially move all the way back to 21.9 or so, which would bring us actually back to levels not seen since mid-June. So right now, I think the Nasdaq's very much in a vulnerable position because we just don't know what's going to happen with Nvidia, and it makes it very difficult to predict what's going to happen in an index when we're kind of holding our collective breaths for what's going to happen in just one individual stock. Really, it's the same thing when you look at the S&P 500, because again, Nvidia, just like it is in the Nasdaq, has a very big weighting in the S&P, and right now the S&P is also sitting just below its recent highs. It too tried to, recover a bunch of the losses that it suffered last week and or most of last week, and then recovered on Friday. But as of right now, we're not really getting a clear sign. You can clearly see momentum is favoring the downside. Obviously, again, if we see Nvidia not perform well, there could be a chance that we see the S&P break below the 63.75 area. Likewise, there's just as good a chance at this point that we break out above 64.75 as well on strong results. The only thing that's nice about the Dow is that it's not as heavily influenced by Nvidia. But one thing that did change last week on the Dow was that the Dow actually made a new all-time high, despite the weaknesses that we were seeing in the S&P and the Nasdaq. And again, Nvidia's results won't weigh nearly as heavily as they do in the S&P and the Nasdaq for the Dow. So right now, the trend appears to be higher. There's really nothing to dispute that at this point. RSI is still fairly low. Bollinger Band suggests we could revisit the high that we saw on Friday, maybe back towards this 45.7 area. That would be certainly one place to look for. Otherwise, there's really not much to say that the Dow can't continue to go higher. Obviously, if we were to see the Dow break below these previous highs at 45,000, that would really be a negative indication, because after trying to break out and failing to do so, that's usually not a positive development. Anyway, I hope you found this helpful, and we'll see you next week. Bye.